Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, December the 19th. The year's 2019. Let's talk trading. How to improve your trading. Patience. I think we've talked about this before, but trading is about 99% waiting. You wait for an entry, you enter the trade, that takes all of a second or two, right? Then you wait for your exit. That could take a few seconds. That could take a few minutes. That could take a few hours. Could take a few days, weeks, months, in some cases, years, like if you're Warren Buffett, right? Patience. I mean, if there's one of the things that most traders need to work on, need to improve, it's their patience. You know, that FOMO, FOMO, fear of missing out. Oh, that really can get you. You know, it's like it's right near that area you want to get in, but it's not quite there. But it looks like it's going to go the direction you're going to want it to go anyway. So you jump in. Next thing you know, it takes you to your stop loss. So what do you do? How do you learn to sit on your hands? You know, there's many things you can do. Some people use indicators with alerts, you know, email alerts, text alerts, or pop-ups on their screen. Some people only give themselves a certain amount of time during the day, maybe a 2 or 3 hour window. Lately, because I've been busy with some other things, what I've gone is it's like I look at a 4 hour chart and I go, almost everything that I do on the 1 hour chart or 15-minute chart, it's going to hold true on the 4 hour chart. So if I'm looking to trade out of a wick zone, if I'm looking for a rat zone type trade, a holo trade, an ATR trade, reversal trade. So at my time, I'll check in, say 6 o'clock in the morning. And then if I don't like what I see there, I'll go do the stuff I have to do. And then I'll check in again at 10 o'clock. So that's one way. It might work for you, it might not. It just depends. Because a lot of times, if you sit at the screen, you want to do something. But the thing is, sometimes wanting to do something and doing the right thing are not. You don't always get desired results. It's not one and the same. And so that's just another reason why you have to have your risk management and money management in place. Because you see, what we're really talking about is patience. That's the execution. That is waiting for the signal and then taking the signal when you see it without hesitation. And part of patience, too, is putting on your stop loss in the right place so you don't lose more than you're willing to lose. Now, some people say, if the trade's going against me, should I let it stop out? And I say it depends. How far is your stop? If your stop's 25 pips away and you can clearly see, say on the minute chart, it's just making lower lows and lower highs and you're long, and on all the other, then it's like, exit that trade. Just exit the trade. All you have to do. And then you can get back in if price actually reverses in your favor. Or your setup may appear again and you'll get in at a better price. But that's something you have to decide in the moment. But remember, boys and girls, fellow traders, these videos are for educational purposes only, and your results may differ vastly from mine. And that trading's very, very, very risky. You can lose all of your money. Therefore, if you're seeking financial advice, investment advice, trading advice, Seek it from an accredited financial professional. That way, when you lose your money, you know you got your advice from an accredited financial professional, and that should make you feel all warm and fuzzy, even though you lost, rather than getting your advice from some guy making YouTube videos about trading or somebody posting something in a trading forum or blog. Okay, disclaimer out of the way. As you can see here on the simple chart here, we're looking at dollar yen, some horizontal lines, and we're looking at the H4 chart too. See H4 down here. And what do you see? Well, right here, it was coming back into the wick zone, and then it fell through. And so right now there's 13 pips below the previous day's low. And the thing is, it's so obvious to see in hindsight because, I mean, just think, if this candle had been up to here, you say, yeah, well, it crossed above the line. I went long because it was green. But one thing you might note here, if you go back to H1, you can see here, right there, there's that. And then even if you extend it out, you can see how many times it's tapped that. So like here, you could call that, that's like 1, 2, 3. It's been tapping that over the past few days here. So obviously it's like price wanted to break through because it kept trying, reversing. And you see here, it actually broke it and it came right back up. And now some people would say, that support became resistance, blah, blah, blah. Well, that's just conceptual. The fact of the matter is, where was it? Price failed to close above that line and it went the other way. And we can even, look at a 1-minute chart here. And that shows it even more. It failed to close above it. You see here, it closed below it once, twice, 3 times, tried to go above it 4 times, 5 times. So, is it closing above something or is it closing below something? It's obvious to see. It's not that difficult. Okay, moving on. We've got 1, 2 pairs that haven't filled the gap yet. And as you can see, the dollar yen is actually 2 pips below the weekly open. It's out of the upper wick zone of the previous week's candle. And and you could see right here again, how many times has it tried to get above the yearly open, actually got above the yearly open, but closed below. 1, 2, 3, 4. Well, so far, it looks like 5 times. And as you can see here, we got a red month, a red week, red day. And we now are breaking out right here of the low of the first day of the week, first trading day of the week, right here. There's that range. You see we had an inside bar and it broke that inside bar. We'll see that shortly. Through the open, through those daily ranges, and here's that inside bar. Expand that for you. And right now 17 pips below it. So inside bar traders once again were rewarded. Now, talk about a patience trade. What this says is you don't trade on Mondays. Okay. So then at the end of the day, Monday, you can set your traps. You can do a buy stop, you can do a sell stop right here. And there's money to be made. Hopefully, you get in the trade, and then you set your stop loss. You move it because let's see, we had a low of 39.43, so there was only about 4 pips there. So would have had to have been quick. Move that stop loss up to break even or break even plus 1 because you know price can reverse. Now, many people say, especially on holo trades, I moved my stop, price went entry plus 5. I moved my stop loss up to break even plus 1. I got stopped out. And then price turned around and zoomed up. Well, that's trading. You, you may or may not want to move your stop loss up to break even plus 1. You might want to wait and see what happens. Because the worst thing that can happen is you put your stop where it was supposed to be, so you're not going to lose any more than you planned on losing on that trade. So that's the worst thing that can happen. And so you move up, you make 1 pip, and then price turns around and goes your way, and you now are experiencing FOMO because you're thinking, oh shoot, next time I'm not going to move my stop, and the next time it goes up to 5, you leave your stop loss, then it comes down and stops you out. Now you're totally frustrated. It's like everything you do is wrong. So then you try a George Costanza. So you figure if everything you do is wrong, doing the opposite of what you're going to do is right. But then that doesn't work. And then you're just even more frustrated. So that's why you have to stick to a plan and let the plan play out, because sometimes you move that stop loss up to break even plus 1 and it never comes back and it just keeps going. So that's just how trading works, boys and girls. You don't know what's going to happen next. So you set out with a plan, with an execution plan. In other words, if this happens, I'm going to do this, and when this happens, I'm going to do that. Maybe it's in part of your exit playbook. And you just keep doing it over and over again. Because let's just say, and it's not really possible, but if every trade you just made 1 pip, if you were guaranteed 1 pip every time you place a trade, I mean, you'd be rich. It might sound crazy, but you'd be rich, especially if you're using leverage. I mean, if I got guaranteed 1 pip every trade, you pretty much just bet the ranch. Just you would just max out, take your pip, then come back the next day for your daily pip. But since we know that won't happen, we have to be a little bit more selective in our trading. Range, we've got 6 over 100, and all the action seems to be in the pound pairs. And as you can see, it's to the south side. Weekly H1 highest open was put in, and then price just dropped through, went right through the daily, monthly D1 highest open right there, fell through. So there was 2 opportunities to take these horizontal line trades. As you can see, one above, closed below, and there we go. So if it goes above, closes below, that's an indication which way price is moving. You can see here the pivot was right by the daily open. And so there's your 1 pip trade right there. It's going to take out, you bet, and it's going to take out the pivot. But as you can see here, it didn't hit it right there. It hit it later in the day. So you have to, be careful, right? But you know what? I'm going to wrap it up with that, fellow traders, because we're talking about patience. You just have to wait for your opportunity. Don't rush it and don't be late. And just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks.